All right, what up, traders? This is Jeremy from Escape Velocity Trading coming at you hot for the Sunday, February 25th Market Bias Update Report. Diving right on in. The S&P 500 loved NVIDIA's earnings last week. Huge power candle, mostly on the back of NVIDIA breaking out of its consolidation, pullback into the 20, reported earnings, and just smashed it, continuing the AI theme driving markets all to new time highs here. So looking at the S&P 500, obviously continuing to be bullish. There's nothing to see here other than that. Got support here at the previous resistance point at about 50,000 or excuse me, 5,065. Any kind of consolidation and pullback here has got to be looked at for potential bullish action. The RSI has pulled back and is in bullish range. The MACD pulled back and had been giving us a series of lower pivot highs there. High price here, pivot high here, pivot high here. But we had this kind of little double bottom action a few weeks back, and then it started in rally mode again. And just recently, I said we needed some consolidation. We got it. We had a little bit of a pullback here in the MACD, and now it has broken back and is signaling bullish once again. So different traders are going to look at this chart in different ways. Personally, I think if you guys have been following my reports for a while, you know that any time we have had such a massive move over such a short period of time, I start getting cautious at the upper end of the channel. I don't particularly have an interest in trading the S&P itself right now, but there are a lot of different sectors and stocks within it that are coming off low prices and have really good bottoming patterns. And I'm more interested in playing those individual stocks instead of the S&P as a whole. Now, that's not to say that the S&P can't continue to grind higher. It has shown that it has staying power for this trend, and honestly, I expect it to continue to grind higher, have little periods of consolidation like we just finished, and continue moving higher each time, especially because we have that underbelly of the market that have not been participating as much that can come in and add more support. So I am looking at Apple. Let's get the right ticker symbol in there. So Apple, I mean, it's off about 10% from its highs and actually broke its 200 period moving average in a bearish manner on Friday. I don't expect to see a whole lot of follow through to the downside here, and might actually be interested in a break above 185 as confirmation to the upside again, even though we have these moving averages up above us acting as resistance, mostly just because it's Apple and I love this company. I believe in it. And on the weekly chart here, you can see that it is forming up some support on the rising 50 period moving average. That's why I don't really feel like it's going to continue to the downside much further. I think we have a pretty solid support level here around 180. And if it gets back above 185, or if you want to wait until it's cleared the moving averages on the weekly chart here at about 186.50, let's call it, that is good too. I wouldn't argue with anybody for either of those entries, but I think Apple is setting up to a point where it is going to come back and start adding to the bullish case for the S&P 500. And as that rotation happens into stocks that haven't been performing as well, it gives stocks like NVIDIA the chance to reset, to pull back, to form support, and reset that risk to reward graph while other companies kind of take charge. So honestly, looks like higher prices continuing in the S&P 500. Same thing goes for the NASDAQ. So if we head out to the NASDAQ, you can see we've had this consolidation where the S&P is actually pushing new highs right now. We had a little bit of a high on Friday, pulled back slightly, and anything above this range, 121 to 18,145, any breakout above that level has to be looked out as a potential trade to the upside and continuing momentum for the bulls. Going out to the Russell, I continue to really like look of the Russell. Some traders don't like these kind of symmetrical triangles where you can kind of see you have a pinch coming down on the top and a pinch coming up on the bottom, and price just kind of gets coiled like a spring. Some traders don't like that because there is less probability of a continuation breakout from the original trend. And in this case, if we put this onto a weekly chart, you can see the initial trend was up. Now we're in this kind of pinching wedge, and there's less of a probability for a continuation off those. But looking at this chart, I just have a really hard time seeing this rolling over and going back down in some kind of fashion like we had here. I really liked actually that we broke this support level right here, just barely set a new all-time low for the 3-week period that we are looking at, and then rallied hard off of it. That's kind of a fake out to the bearish side, and then bulls just stepped in a really strong manner, broke through the support that we had from back here, back here, back here. It's been tested multiple times, and now we've pulled back, reset, and now we are sitting right at that important support level. And I see this resolving to the upside. I like the look of the RSI in a bullish manner. I like the look of the MACD on a bullish manner, both on the weekly. If we drop this out to the daily chart, you can see we've kind of been struggling a little bit on the MACD. The latest signal was actually a sell signal, and I think that is going to prove to be a fake out. So I'm looking for the MACD to curl and give us a green histogram here with a green arrow. That will signal the bulls are coming back in, and hopefully see an increase in volume here. I want to see volume come up at least to the average, if not poke its head a little bit above the 30-day average there. That would be an aggressive entry. And then for a less aggressive entry, just looking for a break above this diagonal line and hopefully a close above that diagonal resistance line. And then I think it's off to the races. So I'm interested in playing the Russell. If we go out to Dow Jones, it has been grindy the last several months, going back to the beginning of December of last year. So we have about 3 months of just grinding, really not doing a whole lot, just very slowly kind of trekking up. But the thing that is interesting to me here, and I'm going to zoom in, and you can see the 9 EMA exponential moving average is in green, and the 20 SMA, our simple moving average, is in blue. And you can see they kind of came back, collided with each other, expanded off, and we had some price movement higher, came back and pinched again. And now we're seeing the distance between these two moving average. You can see it here is pretty close, and it's actually gaining momentum, and those moving averages are separating because the 9 EMA moves faster than the 20 SMA. And I always like the look of that when I see the moving averages start to separate and spread themselves out. That tells me that momentum is starting to increase a little bit, and we might expect a little bit more of a ramp up here towards that 40,000 mark. So that's kind of what I am anticipating, is over the next few weeks, kind of grinding up towards that 40,000 mark. Looking at the MACD, I really like the consolidation here for the last couple of months. I like the double bottom that happened still in the positive territory here above the 0 line. And I like that we had a chance for the overbought conditions on the RSI to chill out and consolidate here, and it is still smack dab in the middle of the bullish range. So I really like that as well. Again, similar to the NASDAQ and similar to the S&P, though, I'm not going to be playing the indexes directly. I'm going to be looking for the individual strength within those indexes to go out and potentially play. If we go out to gold, I'm really actually surprised at how well gold has held up here lately. There's been a lot of reasons for it to sell, and it has just held this $2,000 price level as support really, really well over the last few months. And I don't see any reason for that, honestly, to change. The dollar had been going up and rebounding some and is now kind of in a go or don't go mode. I have a feeling we're going to see the dollar pull back a little bit, and that would actually help gold pop and come back up to this 2080 level. But we needed to see a little bit of follow through here before I'm going to be interested in it. But if we can get a nice pop off of these moving averages on the daily chart, I might be interested in taking a quick trade back up to 2080 on gold. Following that up with silver. Silver's got some work to do. It has this kind of choppy, nasty consolidation pattern here at the low end of the range for about a month or so, month and a half, going back to mid-January. And really, I think the trade on this is waiting for price to break and move up and clear these last moving averages. Anything above $23.65, I think there is more room to the upside, and I'll be interested to see that break, but I need to see a little bit more consolidation here and some constructive price action first. Let's check out Bitcoin. Bitcoin. The last couple of weeks, I've been saying it really needed to take time off. We got a week of consolidation here. Didn't break the 9. If we put a Fibonacci retracement on this, which is a tool that basically looks at the percentages of Fibonacci numbers. And if you don't know about Fibonacci or Fibonacci retracements, Google it, watch a couple of YouTube videos on it. At some point here, I'll be making a YouTube video on it myself, but I haven't yet. But basically anything after a bullish run that doesn't pull back more than the 23.6 Fibonacci number, which you can see is around 50,637, is considered to have big bullish momentum. And this came down and touched almost to the penny on the low of this consolidation range, at least so far. And is now signaling a little bit of bullish action again and looking like it wants to try to retake that 53,000 level. And if it does, that'll be off to the races to the upside again. I think 56,000 is a pretty easy target, and then potentially going out to 57,500. So those are kind of the two lines in the sand that I'm looking for this next push. I think those are both easily obtainable. And last week I did post a video talking about the really intense bullish thesis that I have on Bitcoin. I believe we're going to see it at all-time highs here back in the 68,000 range, probably sooner than later. I would not be surprised to see it get up into that range in the next couple of months here. And from there, it's price discovery to all-time highs, and who knows what the limit is. But I'm taking this one swing at a time. So looking to play this from the 53,000 level up to 56 or 57.5. I will probably take profit there, or at least tighten stops up pretty heavily, and then wait for the next trading signal. Going out to crude light. Crude light, sorry for all of the lines and gunk on this chart. I've been doing a lot of analysis on this chart. I'm starting to get a little less interested in it, if I'm being honest. It hasn't broken its 20-period moving average, and as long as it holds that line, I am fine with this. But we're really looking for a breakout above 79 and change. I'd say 79.30, somewhere in there is a line in the sand for a breakout. If it breaks out from there, we might see a tiny bit of resistance at 80, but I don't see anything really stopping it until at least 82, and then up to about 86. So there's going to be a potentially really good trade on crude light here at some point coming up in the near future. And that means we need to be looking at all of our energy stocks. So this big consolidation pattern and bottoming pattern on ExxonMobil with a break above about $106. You need to keep that on your radar. If we go to Chevron, you're going to see a very similar pattern. If we can clear this little gunk here, anything above about 156 and change, I like. So trigger from that, then coming back up into longer term moving averages. How about MRO? Just take another look. Nice double bottom here, rounding, breaking through moving averages, shorter term moving averages starting to curl up and move higher. I don't see any reason it's going to stop this from coming up about another $1 up to 24.75 to this 200-period moving average. And honestly, long term, I see it breaking that and moving back up to 26. And then let's just look at one more, Oxy. This one is one that Warren Buffett just loves. He actually owns a huge amount of Occidental Petroleum. A break above and close above this 50-period moving average around $60.77. In my mind, is a trigger for the upside for aggressive traders, otherwise waiting to break this diagonal resistance line, which is currently at about 62.40. And I assume that if crude light chart moves higher, this is going to break out and start to run again. So I'm kind of keeping an eye on all of those charts. Going out to Ethereum real quick. If we drop this to daily chart, you can see gap up on the futures here. The chart didn't actually gap on the Ethereum chart, but on the futures, because it is closed Friday afternoon, Saturday, and then Sunday morning, and just opened again. We missed that price movement here, but it just basically consolidated for a while. And then over the last 24 hours, from this time Saturday until now, it started ramping up and is now in price discovery, pushing back up towards its highs. If we drop this out on a longer time frame, you can see we still have a ways to go to get up to highs. It had been almost up at 5,000 at one point. I'm not expecting that to be a smooth straight line, although it does have the ability to on momentum. I am expecting us to probably get up to the 3,500 mark. That is kind of where I am targeting for the shorter term, speaking about the next like 4 to 6 weeks probably. I see some momentum starting to pick up more and more on the weekly chart here, and expecting to see push up to 34,000 or 3,400 or 3,500 on Ethereum. Just checking out the Palladium chart because I've been interested in this, looking for a bottoming pattern. Still has some work to do. Need it to get above its 50-period moving average, so nothing really to see here yet. But I do like this consolidation, and the longer that we consolidate under that range, the more I am going to like the break above that 50-period moving average, and then targeting back up to the decreasing 200-period moving average. So keep that on your radar, but just not quite there yet. Finally, I mentioned the dollar, but let's just take a quick peek at it. It does actually look like it might be trying to roll over here. Price is kind of caught right between the 9 EMA and the 20 SMA, and we need to wait to see which way this resolves itself. A breakdown below the 20-period moving average and let's say probably below 27.95 would be bullish for the market. When the US dollar goes down a little bit, it makes it easier for businesses to conduct business and borrow money and that kind of stuff. So seeing this roll over and confirm to the downside would help the market. And then finally, if we go out to our market internal, the AR high-low, this is basically showing continued bullish and actually increase in bullish momentum here. We'd had a couple of consolidation days earlier last week where we were kind of hovering around the zone that doesn't really give us a clear signal one way or the other, but Thursday and Friday were definitely clear signals. The bulls are still in charge. So nothing to see on that front other than it's saying continue to be bullish. So that is what I am doing in my account. Finally, going out to look at our Forex factory for the economic data that's coming out this week. Monday, there's not anything really too important. Tuesday, consumer confidence numbers should be important, but I'm not expecting it to rock the market one way or the other. GDP on Wednesday, and then the core PCE price index and unemployment claims. This is going to be the day that I think we're really going to potentially see some price movement on the economic data being released. That does get released pre-market, about an hour before the market opens. So know that whatever reaction we have to that will already be priced in by the time the market opens. And then we're just going to be dealing with whatever volatility aftermath there may be for it. And then finally on Friday, ISM manufacturing PMI data and the revised consumer sentiment data will also be important. So kind of weighted towards the later half of the week this week. And then finally, last but not least, just checking out our heat map. I always like to end with looking at the heat map for the previous week's performance. This is a 1-week performance looking at the percentage gain or loss of different companies across the larger market. And you can see green dotted out throughout the entire thing. I really like seeing heavy green in the defensive consumers, healthcare, energy, real estate, industrials, basic materials, utilities. So this tells me that this market is not just being carried by NVIDIA's big breakout, but other sectors in the market are helping to participate as well and picking up some slack. And that gives the opportunity, like I said before, for NVIDIA to take a rest, to pull back, to regather some energy for the next bullish move without the market tanking when it pulls back. So that is what I'm looking for, and I'm really particularly interested in some of the charts that are coming off the lows in the lower half of the market right now. So I hope that helps, guys. Enjoy your trading week. As always, let me know if you have any questions. I'm here to help you, and I will talk to you again in the market report for next week.